Bitcoin has a lot of great qualities. It's scarce, it's digital, it's decentralized. But it has one flaw, that it drags around like an albatross around its neck. In fact, there's a solid argument to be made that this one thing is what finally crushed the last bull run. The good news about that, though, is that this flaw caused altcoins to shine. And there is little doubt that when Bitcoin's ugly side comes out again, it could propel some altcoins up to all-time highs in short order. Find out what the flaw I'm referring to is and which altcoins you should be betting on. Let's get it. Hello and welcome to BitBoy Crypto, your one-stop shop for all things related to Bitcoin and cryptocurrency. I make videos on this channel almost every single day. If you like what you hear or see, then please make sure to hit that subscribe button and click the bell to turn on notifications so you never miss an upload. If you would like to take the conversation further, then please make sure to join my Telegram groups, the Bit Squad for crypto chat or Bit Squad traders to discuss trading strategies. All right, guys, I took a couple days off. It's really rare, but now I'm refreshed and ready to go. And today's video is gonna be epic. I'm gonna be showing you guys something that is a very big deal. This is one of Bitcoin's biggest problems, if not its number one problem. But wherever Bitcoin lags, there's always gonna be an altcoin to fill in the gap. So we're gonna discuss what this problem is and which altcoins will benefit the most from this flaw in the next bull run. Then at the end of the video, I'm going to be giving you guys a huge update on a project that we love on this channel, IOST. There was some absolutely huge news about IOST that dropped yesterday, and I can't wait to share it with you. So at the end, we will check that out. And even if you aren't invested in IOST, then you're going to want to check it out anyways, because it involves other top coins as well that you may be invested in. Okay, so what is this absolutely huge flaw with Bitcoin, and what does it have to do with altcoins? You see, the flaw of Bitcoin is that it is extremely slow. If you want to get technical, the reason it is slow is because of its extremely small block size. This is what the entire Bitcoin Cash fork was over. One set of Bitcoin developers felt like they needed to have bigger blocks that allow more transactions to be packed in together. This would make transactions much faster. Now, stay with me through this explanation because even if you aren't very technical or you don't even care about the logistics of how Bitcoin works, you might just be an investor, this is still going to make sense to you here in a few and you're going to want to hear it. It's important that you understand the role that speed plays in a decentralized digital network. The whole point of decentralization is so that the network can run itself without the need of intervention from a third party like a payment processor. You can think Visa, MasterCard, PayPal, etc. Everything on a peer-to-peer network like Bitcoin has to be fast for adoption to ever become a possibility. Some say Bitcoin will never be fast enough to truly become an everyday digital currency. If you're just an investor in Bitcoin and you don't really care about the speed of the network, that's great. But what you do have to understand is that when Bitcoin gets really slow, it's because the network congestion is very high. When many people are trying to push Bitcoin transactions at the same time, the fees of the transactions skyrocket. The Bitcoin fee structure works off of supply and demand. So if you want your transaction to ever go through when transactions pile very high, then you have to pay a very high price. Now, before we look at how this played out during the last bull market cycle for both Bitcoin and altcoins, let's look to see if anything has really changed. And the answer is kinda. You see, there have been some solutions, including SegWit for on-chain scalability and the Lightning Network for off-chain scalability with Bitcoin. Basically, what Lightning Network does is that it allows several transactions to be packaged together as one transaction. Now, Bitcoin maximalists defend Lightning Network to the core as some type of end-all be-all solution for Bitcoin transaction speed. I'm not sure if you've ever tried to use the Lightning Network, but let's just say it is not the most user-friendly thing ever. I've definitely used it many times. Most of the Lightning Network apps and wallets are frankly terrible. And if you think there's a learning curve to Bitcoin, then how successful do you think retail adoption will be when now we have to add in another layer of education to people so they can understand the Lightning Network. It's just not really going to help, sadly. Coinbase recently announced that they would be batching transactions together automatically for their users. And that is great. It can save users up to 50% on their fees when you use Coinbase. But as we'll see in a second, still way too high. So looking here at the all-time Bitcoin fee chart, every time the Bitcoin price starts moving up significantly, so do the fees. That's network congestion. At Bitcoin's peak in 2017, the fees were astronomical. The fees were an average of $55 per transaction. Keep in mind, of course, Bitcoin at that time was around $15,000. So what does all this mean for the future? Well, we haven't had a huge bull run since 2017, but many people are expecting Bitcoin to go to $100,000 next year. And personally, I do still believe that that will happen regardless of the chaos around us. But if Bitcoin does get that high, the fees are going to be absolutely insane. They could be as high as $300 to $500. Even at a discounted rate of 50%, those fees are still going to be outrageous. So what happens when Bitcoin spikes in fees? Well, it would be the same thing that happened in 2017. When Bitcoin fees go up, people shift their money around through exchanges to transfer and transact. In the 2017 hysteria, people mostly used ETH and Litecoin to conduct transactions because they were much cheaper and faster. So expect the same thing to happen again. So when Bitcoin does really start rolling after the halving, you're going to want to look for some altcoins that people may try to use to send their transactions faster and cheaper. This means there will be a lot of buy orders on those coins that could send them to the moon. This undoubtedly had a huge impact on the prices of Litecoin, Ethereum, XRP, and Dash, to name a few in the last cycle. These are coins that got huge pumps in 2017 due to people sending value with them as opposed to Bitcoin. So which coins do I expect people to use instead of Bitcoin for transactions when the network gets clogged after the halving this time? Well, you need both speed and to be able to easily get in and out of trade, so it has to be a readily available coin. I do wonder also if Ethereum is going to have scalability problems during another bull run like it did with CryptoKitties. So the coins I'm looking at that will get the greatest positive effect and upside are Dash and Tezos. These are both very fast coins and very easy to obtain on Coinbase and Binance US. Of course, XRP and Litecoin will also likely be favorite choices of new investors to move their crypto around, so look for those to go up in price also. So before we get to our last story of the day, I do want to tell you guys that Bybit is giving away up to $1,000 in airdrops of USDT to account holders. The first one started today, and there are still more airdrops coming. Each airdrop has a few different things that you have to do to claim it, but ultimately, they're giving away free money, so you may want to check it out. If you don't have an account at Bybit and you'll want to sign up and get up to $90 for free to trade with, then please make sure to use my link by visiting bybit.bitboy.live. We've been doing great in our Bit Squad Traders Telegram group. I've posted a lot of trades in there. I think everybody would admit I've been doing some killer trades with Profit Sniper and FOMO Trender and some other tools. But if you want to get a part of that and you want to learn how to trade, then make sure you guys come into that Telegram group. And if you don't, that's great too. Nobody's forcing you to. All right, so do you guys remember the Chinese crypto rankings? I remember reporting on these, it seems like about 2 years ago when they first came out. Well, the Chinese rankings are put together by China's Center for Information and Industry Development, aka the CCID. While China has been against cryptocurrency and Bitcoin for a long time, they are all in on blockchain. These rankings allow China to provide a transparent ranking of blockchain tech and use case. Well, at least as transparent as China can possibly be. So take that with a grain of salt. But the recent rankings that came out on April 13th show a new competitor in the top 5. IOST is coming at number 5 in the rankings overall, and also number 3 in the tech category. China really loves IOST's tech. And whatever you feel about China's political infrastructure, and we all have personal opinions on it, the fact is when you look at blockchain from strictly an investment standpoint, China liking the project you hodl is a good thing. The current CCID top 5 is IOST, Lisk, Ethereum, Tron, and EOS. The CCID currently ranks 37 top crypto projects. If you don't know about IOST, then you must not watch my channel. That was a tell. This is a project that doesn't get nearly the amount of interest that it should get, but I love it. Now, why does it not get the interest? Well, it's been constantly sliding down the rankings on CoinMarketCap, which is definitely not great for the price. But at one time, it was almost a top 30 project. Over the last year, after the launch of its mainnet, it's definitely had a rough go of it after an initial surge. In crypto, though, sometimes projects get the hype. They get it passed to them. And last year in the spring, IOST had the hype. But since then, other projects have started to pass them in price and hype only. The reason I first invested in IOST was because of its decentralized model and its tech. It's way more decentralized than Eostron or any other DPoS project that I know of. So what we are seeing here with these CCID rankings is that the tech is still very strong with IOST. And I say it all the time on this channel. The cream eventually rises to the top. And I believe IOST will still have its day in the sun. I run a block producing node for this project, and you are more than welcome to vote for my node, BitBoy Crypto. If you do invest in this project, you can get about 15% returns annually. So now it's your turn though. What project do you believe could moon because of Bitcoin's outdated fee structure? Do you believe that at any point, Bitcoin is vulnerable to get passed by another project if their developers can't come up with a scaling solution that will lower the fees? I still don't personally see a project passing Bitcoin regardless of the fees, but that's just my personal opinion. I hope you enjoyed this video. If you did, then please make sure to smash the like button and hit the bell for notifications. Make sure that you subscribe to become a member of the fastest growing community in crypto, the Bit Squad. Thank you so much for watching. Have a blessed day. BitBoy out.